Hello, everyone. Hopefully you can hear me and see me. So we are getting ready here. Hi, Kevin, Aaron, Al, Tom. How's everyone doing today? Had a wild day on Friday, huh? Woohoo! A little crazy today, but nothing like Friday. So we're going to talk about actually some leading up to Friday, and of course Friday's big move that was pretty wild, brought to you by your president, and the possibility of increasing tariffs dramatically on China. Of course, Barry loved Friday. Lots of people did well on Friday. Unfortunately, I read some stories where people, of course, if they're long only, or I could see being frozen with fear, going, "What's happening?" And actually had a bad day. Lots of people had bad days on Friday as well, but it's the way it goes. There's ups and downs, there's trends, there's auctions, the auction process going back and forth, etc. And anyways, does anyone have hopefully a good story from Friday where you, a friend of mine, he texted me and said that he had just bought a bunch of puts and he made 12 grand on that drop. So that's nice. Surprisingly, Al, one of your best days. Good. Glad to hear it. Okay, so what I'd like to talk about today is fractals in the market or repeating patterns, and I want to talk about them in a couple of different ways. And I'm not going to give you an exact here's the pattern that will make you a fortune, but I want you to think in this sort of way and look for them, and something that catches your eye that you might be able to see and identify. Yes, this is a pattern that's repeating, and here's the key: on many different time frames that can help you with your trading moving forward. By the way, this is the first time I've done this, folks. The Market Minds, so I hope I do a good job. I've done a lot of webinars in the past, but nothing quite like this. So it's my first time. A little nervous, so I hope I do well. But that's what we're going to talk about. Some fractals. I'd be happy to answer any questions. Is it Dennis? You made over 8 grand on the SPX. Very good. Glad to hear it. And anyways, let's go ahead and move on. So I am Dan O'Brien, and I specialize in the futures market. Of course, I trade stocks for myself, but I don't do that for Prosper. I focus on the ES really and the NQ, and I'm going to show a couple of those charts as well. And I do a lot of my trading to go long or short is based on algorithms, and one of them indeed is looking for fractal repetitiveness in the markets, which I'll definitely be showing you. But I want to start really with some serious basics here. And you could look at a fractal strategy in many different ways. You could go down a rabbit hole, really, I guess, on the internet of looking for repeating patterns. And there could be things like you see here on the screen: triangle breakout, a sideways move. By the way, when we get a lot of sideways moves in the S&P, I call them coffins of congestion, because usually they come with no volume and zero volatility. And so if you're going to put on a trade in the middle of that range, it tends to be where your money goes to die, thus the name coffin of congestion. I'm fond of rectangle of regret as well. But that is indeed a type of repeating pattern. And people who are in my trading room, when the market they could tell you, Dan's exactly right, so that when the market will go up and then go sideways for 60 minutes and then up a little higher, and then sideways for 90 minutes or 2 hours, and then just keep going. So it's a repeating pattern, and you'll see that on many different time scales as well. So how can that help you? Whether it is something like, again, what we're seeing here on the screen, a triangle breakout or something, is in exactly that. Number one, I would say, like going back to what I just mentioned, the coffin of congestion, is that you're not surprised. When you see it, say, well, yep, I've identified that pattern. And so here's what the probability is of happening next. There's no guarantees in trading, as we all know, other than commissions. And, so we need to think in terms of probabilities when we see these patterns. And in this case, it would be I identify a range, and then we try and trade on the edges of those, to short the top, buy the bottom, but we're ready for a breakout as well. So again, I wanted to talk about some simple things like that and how do I identify them, and actually what happened last week. Remember, I was going to do this on Friday because there was some pattern that I want to share with you that did happen, and then it was continuing on Friday until the news hit about possible new tariffs. So overall here, what we have is that the theories of fractals in technical analysis says that financial markets are chaotic. I think we could all agree with that. But within that chaos, patterns emerge that are not random. In financial markets, the theory explains that these repeating patterns, or fractals, can indicate psychological points of reversal where price trends are likely to change direction or break out. The premise is that, as I mentioned, up, then sideways, and then up further, etc. They can reverse, but they can show range extension as well. So the premise is that the market movements are influenced by traders' reactions to price changes, which tend to follow repetitive cycles because of human nature, of course, and collective memory. This cycle behavior then creates patterns that can be recognized and used to predict market changes. Sounds good so far? I hope so. That's right. Past performance does not guarantee future results. You got that. Okay, so when we're discussing fractals, we start with identifying repeating patterns on different charts and how they can help spot a reversal from time to time within the 1, 2, 3 labeled charts. Now, I use, when I'm explaining this in my trading room, or even to my boys who trade, is that I use a 1, 2, 3 connection of the 3 algorithms. But we're really just going to focus on the main one, the number one, that has to do with self-similarity. And before we move on to my next slide, what I want to do is I have a, just so you know exactly what I'm talking about. Can everyone see that? What does that look like? It's just sketch, of course, and it's simply a tree. So what I mean by fractals, and you think about it this way, is that you have your main trunk, as you see on the bottom there, and tree right outside their window. And then that splits off into branches, but each one of those branches, like here to the left and here to the right, if you look at it, it's really its own trunk. It may not be coming out of the ground, but think of that as its own trunk that then splits left and right. And that new branch is indeed a new trunk that keeps splitting and splitting. Only one, of course, comes out of the ground, but the root systems are the same as well, as each one of those splits off. And so that's that repeating pattern in nature all the way out to the leaves. And then the leaves are fractal as well until they end. Others would be snowflakes, the bronchial tubes in our lungs. As they branch out, they're constantly repeating. And so we can find this sort of thing in the financial markets because, as I've just mentioned before, because of human nature, and it just tends to repeat. The key is, can you recognize them again on multiple different time frames, and then take advantage of them. Hopefully you can. We try and do it in our trading room with those coffins, but then there's some other things as well. And what I'm about to talk about here, I put in my nightly video Thursday evening before the market had that big drop on Friday. And this was it. So this is a 30-minute chart, and we don't necessarily trade off of it. We don't, but I use it for the bigger picture. So you can look at, of course, weekly charts, daily charts, et cetera, and then I see patterns on them from daily, even weekly, and then skip down to a 30-minute, and then a 10-minute, and then tick charts, and then et cetera, volume charts. And if you see those repeating patterns, okay, you've got something. Well, this is what led up to Thursday. May not look like much here, but let me share with you how I'm seeing it. First of all, the blue ellipses, I just thought that I would point out that those were all-time highs. So we had 6 all-time highs separated by 1. Here, you see there's no ellipse there. So new high, new high, new high, not a new high, new high. Everybody gets a new high, like Oprah and her free cars. And so that's interesting, new highs and low volume, very low volume, but a repeating pattern. Now, I had a warning as well, and here's a warning to everyone watching me now or this video in the future, and that is that even though we can have these fractal repeating patterns, you have to remember this is a non-linear stock market, or this is the futures, but same thing. And so news can come out of nowhere and change it, and then you may have that repeating pattern on the downside. But you have to remember that it's certainly not going to last to infinity. So just keep that in the back of your mind. But here is the pattern that I'm seeing here that I talked about in this video Thursday evening, is that first of all, we're making new highs on low volume. And we had this, drop here and then a slow rally into the close. A drop here, and I was expecting it to be a little earlier, but a strong drop and then no rally, but it didn't make new lows either. It didn't even come close to new lows. A strong drop here early and then a slow rally, another strong drop, very strong this time, and then a move off the low and a little rally into the close, and then a strong rally and lame into the close. And then again, here we have a drop similar to these last two, strong drop, 3 out of these days in a row. And then it was starting to, in fact, this is at the close here of Thursday. And again, it balances and close and having a slow rally. And so how could that help you with your trading? Well, the expectation here is that, okay, we get these strong drops, and when it slows down, you can expect there to be at minimum sideways. But this is, again, it's a 30-minute chart. And if you're day trading something faster, let's just say a 1 minute, I don't use a 1 minute, but let's say you did, and you could find opportunities because you're seeing this pattern and that it's happening again. And there should be a balance and a rally going late. The other thing is when it gaps up high, makes these new all-time highs in the ellipses, then we had these strong drops. So although it was, we hadn't had a real massive drop until Friday, we still had these intraday drops that were pretty interesting and pretty strong. And so those, you can expect both that strong drop, then the balance in a late rally, et cetera, et cetera. Now, and so I was pointing that out that we might get more of that on Friday. However, this 67.41 is the black line. So this is what I was thinking and saying, that we have this repeating pattern here. And yes, we might go up to the red line, which is the all-time high of the overnight session, and it may keep repeating. However, because the volume is so low and the volatility was outside of those strong drops very low, that if the market did get under 41.5, that we could have a very large break, because this pattern would then be broken. There may be a new pattern emerging on the way down. Maybe that's going to take some time, but it may be coming to an end. And I don't know. I didn't say, hey, Trump is going to make an announcement about China because their negotiations aren't going all that well. Of course, I didn't know that. But it happened. And once it got under 41.5, the market went, as you know, crazy. So again, these repeating patterns can help you intraday and then at breakout levels. And here's this same chart, looked at it in much more time. Here's the 4150 level. And when it broke, as we know, it traded below 6,600. So it was definitely a one-off. I was not expecting that sort of movement, but under 41.5 to break this pattern, I was thinking for the first day to the second line, and then possibly, if it was really strong, maybe down to here. But I really thought that might take a couple of days. But that pattern, I hope you can see it, and where the ending point might be, especially with it keep going up on very low volume and just constantly slowing each time it went there with the big drops and the big drops. It's almost like traders were testing the lows. They couldn't get it done until something bigger came out, which, again, we got on Friday. All right, everyone with me so far? Al asked, is it similar to a Fibonacci? And I think there's like in nature, there's the Fibonacci numbers repeat 0.618, et cetera, et cetera. So you could probably put Fibonacci in there with the repeating patterns, but I'm just looking at these chart patterns, and then we'll get to a little math in a moment. All right. By the way, does anyone actually look for this sort of thing? And I mean outside of the general pennant or flag, something like that, where you see this sort of thing, a swoon and then a move up, and a swoon and a move up, and then a swoon, and you go, wait a second, this keeps repeating. Anyone actually, Al, no? Double tops and double bottoms, they've been around forever, sure. Yep, triangles, flags, I don't really look for those sorts of things. Maybe I should, but I'm just more like this, and then some of the things we'll talk about here in a second. So,
hey everybody, sorry to interrupt, Dan. How's everybody doing?
Good. How you doing?
Awesome. I appreciate you, Dan, stepping in today. Will you do me a favor and just put up the word of the day for everybody?
Sure. I have to skip a few, I think.
There we go. Oh, that should be all in one line. It is future or futures. We will accept either one, everybody. Either one, future or futures. On Friday, obviously we canceled because of how the market was, but we had a different word of the day, and it was going to be one more win. That didn't work out for us, did it, on Saturday's Cub game, but that's okay. All right, we'll leave that up there for another 30 seconds or so, and then Dan will continue on. But thank you, everybody, for being here.
Yeah, both of those teams were loaded with home run bruisers, huh? The Cubs and the Brewers, and it was a battle, epic battle. Okay, I'm gonna go back. Everyone's got that word of the day there. Okay, actually okay, we looked at that chart. This here, right? So, this is a daily chart, And it's just, here's once again, this pattern recognition. You've got a range extension, and then you've got 1, 2, 3, 4, 5, 6, 7, 8, 9 or 10 days in the same range, and then range extension. And this time only in the same range, 1, 2, 3, 4, 5, not the exact same amount, of course, a drop, a rally, and then 1, 2, 3, 4, 5, 6, a drop and a rally. So this pattern here is not as good as what I would see on an intraday chart, but it is there. And then it rallied again. And we have in this general area, 1, 2, 3, 4, 5 days of swoon, and then right back into the same area, 6, 7, 8 days in the same general area. And it's doing it yet again before the big break. Where here we had 1, 2, 3, 4, 5 going on 6 days. And then you would expect yet another move up unless something crazy happened, which it did. And then this is, I believe, this is one of the rallies. This was late in the day, I believe, on Wednesday or Thursday. And so here's where we're coming to one of the algorithms that I use, the one on the bottom. So the one on the bottom, and you can do some research on this sort of thing, but this algorithm down here is indeed looking for fractal, repeatable patterns on a mathematical basis. And it's looking back, it's called using rescaled ranges. So it's automatically looking back and checking, well, does this pattern match way back, and then a little bit back, and then a little bit further back, and then until it reaches the end of its code. And if not, if there's no self-similarity on multiple different look-back periods, then the output value is going to be below the white line and down in the pink, and then there's a dark red zone, which means it's even choppier. So in other words, when it's below that level, there is no self-similarity. There is no repeatable thing going on when it goes through its look-back period. Until 1456 here, when you see that it traded up above the white line, and it's saying, okay, here, as I'm looking back and these different ranges, so in other words, like different time series, or the tree from the leaves to the tiny branches to the bigger branches, all the way down to the trunk and the root system and everything. It is at this point, it's saying, okay, it certainly looks like we're seeing self-similarity on these repeatable timescales. And therefore, that would tell me, well, we should be moving away from the prior choppy zone. So the math is telling us that. And that was right here. And unfortunately, this chart is kind of chopped off, but I show you some stuff from today, if you like, and Friday. But there was a straight up move as soon as that happened. And this is in the NASDAQ. This looks like it's about 25,237. I think it went up 100 points from there. And yeah, let me pull the NASDAQ in. Could everyone see this new chart here? The wheel is closing in 2 minutes. Okay, so this was the 10th. So yeah, this is Friday. And so this is before the open, and the mathematical algorithm is saying that, okay, at 9:37, it's starting to see some self-similarity on multiple different timescales. And the direction is up. There's other things predicting that the direction is up, but it was. And it just went up slowly. And sometimes that happens. We're not really growing a tree. We're trading a nonlinear market. And so once the data hit and it says, yes, there looks like some self-similarity, in other words, a trend from a non-trending area, we have, expectations that it should continue. And then as things go on, we go, okay, there could be some news coming out that could change that. And so we have to, change our probabilities of it continuing based on many spinning plates, many things that could change. Well, it goes back eventually. It starts to trade sideways for quite a ways. And then when the news hit, it said, yeah, we're starting to get some of that self-similarity right there with this breakout. So this was range extension here. And this one is the breakout below the sideways move there. And then it did it again here. I don't have an ellipse on it, but you can see it happening once again, coming out of the red zone and saying, yes, we now have essentially a new trend based on the look back periods. So the math was saying that, yep, we should have a new trend there, and there was. And another one on the way down. So again, a couple of things. If the math is telling us that there is the probability of a trend in this area is very low, that's why we would focus on maybe buying the bottom of the white channel, shorting the top of the white channel. Or if you're a trend trader, do nothing at all. Go grab a cup of coffee, because this is not your time. So it's the output value is below the white line. It's down in the red. Doesn't mean sell. It just means danger. No trend until here. And again, the look back period said, yes, from way back here is similar to right now, which is also similar to all the look back periods in between. And so therefore you have that fractalness of different time scales being very close to each other, which should mean a trend. And again, in this direction, and in this case, the direction is down. So, I mean, I could show you multiple examples of that, but that's how it works on the long side and the downside. And as I say, the things can change quickly with news, tweets, etc. So, we've got to be sharp when we're using it as well. Here's the rally. So we had a drop and then the reversal, balancing and still going up. And where are we at right now? Right now, so we made the yellow line means the overnight high. So we made a new overnight high in the NASDAQ. And as I look to my left, the S&P as well. And they've both pulled back. And so I would expect that the output value here of this algorithm should be starting to drop below the 0.5. That's the middle level of, is it there's self-similarity, fractals are there or not, below the line. And since I see the price going up and down, I would expect there to not be any self-similarity, and in fact that it should be below that white line here pretty soon, which would then help you say, well, if that's the case, then maybe it drops down to this 860, 855 area and then bounces again. And so then you can look at other programs, read the tape, looking at volume to help with that determination. Because, the math is saying the one thing and you need some expectations to go along with it. And that's basically it for the fractals, as far as that, like that live view right there. So what I would suggest is to look at different time frames, folks. And if you see something that repeats on a daily and maybe an hourly, and then as you keep coming down the time scale, then it's something that you could probably take advantage of going into the future. And it doesn't have to just be a pennant breakout or something that you've read about before. What I'm getting at is you should see something brand new, and then it's something that, it could help you create a new edge to be a better trader. So I hope that helps everyone. The wheel is closed. I'm glad you liked it, Aaron. Hopefully it helps you moving on. So is Mike back there or Scott? Who's the winner today? I can't read that.
Hey there, I am here. There you go. Let's go.
Okay.
Love it. We've got Charlie, Dave Edwards. Love it. Are you in the house, Dave Edwards? If Dave Edwards is in the house, you go on to the special wheel, which we will spin on the 31st of October for a potential free trip to Vegas for our conference in December. All right, Dave Edwards, nicely done. You are here. You are here. Love it. All right, everybody. Thank you. Hope you enjoyed your time with Dan. Dan, thank you so much. We love opening up the world to our students about other things that they can trade that has a lot of liquidity. So
yeah, definitely, and that they don't have to just go with what they read on Google about a certain pattern. You can find your own patterns because they happen all the time. Like the video I did Thursday evening, and that will help you with your trades. Believe me, just got to look for them.
Awesome. Thank you, everybody, and we'll see you all tomorrow. Have a good one,
everyone.